I bought a 9 unit, November 21, and I had in mind to flip it. Then, interest rate was so low. I'm like, maybe I'm going to keep it, just raise the rent and everything. So that's what I did, raise the rent. And I did a super job. Like I went from 6,900 to like 14,000. It's a big
Whoa.
rate, kind of more than double the income.
Monthly?
Yeah, yeah,
Yeah.
monthly.
That's
And
amazing, man.
yeah, it's awesome. But one thing is, like,
But
doesn't pass at the CMHC though. So I'm stuck.
why
That's
not? Why won't they finance it?
because the way I made the way I set up financing right now, I got a private loan, then I got seller financing and another private loan.
Oh,
And one important note that you have to take if you want to, refinance with CMHC, it's one loan. That's it. If you have more than one loan, you're going to be refused. Well, you have a 98% refusal.
hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today we're very lucky because we have the Montreal #1 wholesaler, Olivier Lepage. How's it going, man?
Hey, I'm great. Thanks for having me. So,
Uh,
a lot of
yeah,
things are happening, a lot of things
plenty
to say.
Plenty of things are happening. I'm super excited to have you on today. There's lots to talk about. And before we jump right into it, as usual, thank you for following us. Thank you for sharing this episode with a friend who you feel could benefit from this conversation. Subscribe to the show, share it, send us some comments. If you have any ideas of topics you'd like to hear about, please let me know because I'm right now doing the rest of my planning for until about April. So if you have topics you want to hear about, definitely let me know. And if you want to join us as a patron, get into the action, get into the inner circle, and have those private meetings and sessions and events, let me know and sign up at patreon.com/real estate effects. All right, Olivier. For those who
Yes,
don't know you, who've been living under a rock,
exactly.
you're the #1 wholesaler in Montreal. You have hundreds of transactions under your belt, and I'm very curious to hear about your perspective on the market right now, #1, and then #2, and maybe we're going to start there. There's a new law that came into effect at the beginning of the year
I
2023,
think
I
it was
believe,
January 1st. Yeah.
January 21st. Why don't you tell us a little bit about it?
Well, it's actually it's a law that was kind of like there before, but now it's more official, saying that well, if you want to buy a house, declare it as your primary residence and then sell it. If you do it, within 12 months, you can have it exempt of income taxes. But if you own it more than 12 months, you could be eligible for having it exempt of income tax. So that's the specification. But if you read the small character, you'll
Mhm.
know that there is some subtleties in there. There is some exemption. You'll have a fine if you don't do it. The worst thing that can happen, I think it's like a $10,000 fine.
Oh, okay.
So
So
worst case scenario, you'll know. I don't recommend doing it, but you'll
Ooh.
know. I think it's a $10,000 fine if you do it within 12 months. But you know what? If you make money on a house and you sell it, I don't mind paying income taxes. I do money and I pay income tax on every dollar I make. So that's all good. I know that, it's kind of a way that a lot of people were making more money by saving maybe 10, 20, $30,000 of income tax sometimes because it was your primary residence. So it was a way to like jump from a house to another one, to another one, to another one, and then make money. But now they're kind of putting a break on it. So it's not that you can't do it, it's just that you'll have to do it slower. Maybe own the house for like 2, 3 years and then jump to another one before doing it again. That's my
Mhm.
recommendation. And that's what I see a lot of people doing. So that would be it. But worst case scenario, just pay your income tax and jump to the next one.
Yeah. And the thing is, can you explain a little bit the background? Like, why did they put in place this new law? Because when you really think about it, like the proportion of people who buy a house as a primary residence and then resell it within the first year is really, really small. I mean, they were just trying to close the loophole, right?
They were basically trying to, take a piece of the pie because they're seeing a lot of people making a lot of money on it. A lot of contractors, a lot of flipper, a lot of renovator, a lot of people doing new construction also that did that. So it's just, the government, especially Quebec, Revenu Quebec,
Yeah.
especially, they're really hungry. They want money and they want a lot of money. So they'll put their hand everywhere they want,
Mhm.
everywhere they can. So they just saw an opportunity of, squeezing a little bit more because they saw a lot of people making money and they said, hey, you know what? Keep making money, but I want a piece of pie.
Yeah.
So I think that's the government. They want to put their hand everywhere.
Mhm. And so someone who buys a house, declares it as their principal residence, and say sells it after 8 or 9 months, they have to pay capital gains. They're not exempt. So
Exactly. It would be capital gain. And a lot of people are asking me about, hey, what about you? It's not capital gain for me. For me, it's income taxes because it's an income for me because that's my job. So it's not capital gain. It's capital gain when it's not your primary way of making money. So if you have a job, if you do something else, you make money, that's your salary. And then on the side, you do a flip or you sell your house, your primary residence, then it would be declared as capital gain. For me, it's income taxes. So it's totally different. So
yeah,
it doesn't change anything for me.
no, for you, it's an active business. It's completely
Exactly.
different and it
Yeah.
doesn't even really apply. Now, talking about this active business, I mean, the market has dramatically changed since last time you were on the show, which was like about a year ago. Like
Yeah.
what are you seeing right now? How's the business going?
Well, I actually, and I'm part of a mastermind where there's a lot of wholesaler, a lot of flipper, and guys, we all saw the same thing at the same time. July, I don't know what happened exactly, but the market hits the brake. Nothing's happening anymore. Like literally, like it stops in
Yeah.
July, and it slowed down like dramatically. And it's pretty rare that happens because normally, I compare the real estate market as a huge cargo ship.
Yeah.
It turns slowly and it moves super slowly. So you kind of see it happen. You're like, okay, that's going to turn. And we were talking about for like 9 months prior to that, and we were like, hey, the market's going to shift, like be careful, sell your stuff and have liquidity. And we're like, okay, well, okay, I'm going to plan for this. Next thing you know, boom, the market switch, we're all stuck with our flip. And the difference is like the time it takes to sell takes much longer. So if you're doing a flip, it's kind of hard because you're estimating your budget on like a 4 to 6 month hold. If you're doing renovation, maybe 8 to 9 months, and now you're stuck with the same flip for like 10, 12 months. So it's hard. You got to renew your loan. So it's a situation where you have to get a haircut, take your loss, get to the next one. Because now
Mhm.
the market has corrected. It's been a while since July. Now we're in February, mid-February. So it's been 7 months. And I think that the difference between where the sellers are and where the buyers are, like in July, it kind of shifted where the buyer dropped down. Uh, you know, um, Interest rate went up, and all the buyers were like, "Well, I can't buy anymore," but the sellers still wanted top dollar.
Exactly.
So it kind of took a while to catch up, but
Mhm.
now, like to have a to compare the same house last year, same little bungalow in the suburb. I was buying for like 450 last year. Now I'm buying for 325. So same house, $100,000 less because
Wow.
my holding cost is much bigger
Yeah.
and the market dropped a little bit. So I have
Mhm.
to be careful. So I'm buying the same house for $100,000 less. So I'm being careful. I switch all my offer and I dropped a lot of deal in July. So that
Mhm.
was kind of hard because, I less income. It was, a 6 month shift. So I had to be careful with my cash flow, sell a lot of things because, I wanted to get my cash flow back and buy at the new price now.
Yeah. And do you find that now in February, sellers have really taken the hit in terms of
I would say
the price decrease?
most of it. Yeah.
Okay.
But there's still some people that are not in the market. They're probably not aware of it.
Yeah.
It's mostly people that needs to sell.
Hmm.
So that's that's exactly where there's kind of a shift of clientele for me. because I don't have less leads. I have the same amount of leads, same amount of transaction, but my clientele shifted to people that needed to sell much quicker, more distressed property, we call
Yeah.
it.
Yeah.
So inheritance, financial trouble, divorce, stuff like this, where people like they have to sell.
They have to sell quick.
Yeah, exactly. They
Yeah.
don't care.
Yeah.
They have to sell now because either that someone's sick in their family, they have to move, they're being transferred, they can't pay. But a lot of people that were on variable rate
Yeah.
are fucking having a hard time right now. Honestly, sorry
Mm-hmm.
about my language, but they're having a
No.
hard time. Me first. All my interest rate went up by 4 or 5%. I'm paying a lot of money monthly, so it's a big difference for a lot of people. So those people are also calling me and like say, hey, I can't pay for that house anymore. I want to sell it. But now
Yeah.
they have to take $100,000 hit.
Mm-hmm.
So it's the same for us. So if you're stuck with a flip, and that's the advice that I've been having from a lot of people is just take the haircut, take the loss, move on as fast as possible.
Yeah.
And even I'm guilty of like not doing it as fast as I would like to. I'm guilty of it. And it's okay if you are also like, well, I kind of have the reflex of holding on to the property. And
it's going to get better. Money. It's going to get better.
Exactly. But honestly, you're losing more by losing an opportunity than losing by selling $25,000, $30,000 less than losing that and putting your money elsewhere. You're losing more by opportunity cost.
Mm-hmm. And then that over the last couple of months, what happened to your inventory? Do you have more under contract that you're trying to sell, find buyers for, or do you roughly have the same amount?
Right now in February, I have about the same.
Mm-hmm.
I have right now, I think I have 3 that are already assigned and 8 offers that either I'm going to buy or I'm going to sign. So, which is about the average that I've had for the past few years. But it took like literally the whole 7 months to catch up. Because for a while, we were not having a lot of transaction, obviously, because the market slowed down. And the big shift in the market was the number of transaction. There's way less transaction compared to last year. But if you compare it to 3 years ago, it's fine. It's going back to normal.
Yeah. So
I'm not scared because I've been in the business for 15 years. I've seen winter times. 2014, 15, 16. It was a shit show. Yeah. Like literally, I was selling offers for $500. And it was like every flip was taking 6, 7, 8 months. It was hard. Yeah. And it was kind of like the same market as it is right now. So you just have to adapt to the new market. You can't be stuck like, hey, my God, everything's going to sell fast like last year. Last year was not normal.
No, exactly. Exactly. We kind of got used to the euphoria of pandemic and post-pandemic where you could put anything on the market, it would just like fly off the shelf. And now we're back to more of a reality. Now, what do you see? Because you said you talked to a lot of guys into the US. You're part of some masterminds. What are they saying over there? Because obviously in Canada we're very influenced by the US market. What's their take, and when do they feel that things are going to start to shift back?
No, that's a good question, and I've been asking that question a lot. I would say that they have a little bit of advance on us normally. Even the rest of Canada, honestly, like Toronto, Vancouver, are catching up a little bit, and a lot of big market in the US are catching up. But lately, like for the past month and a half, they've been catching up. A lot of good deals are going back on the market. A lot of people are going back and buying because now interest rates are more stable. Bank of Canada announced that they would freeze the interest rate for at least the rest of the year. So it kind of it's like the stock market basically, because it's in their head, like investor, it's less risky for them if it's more stable. If it's unstable, they don't know what's going to happen, so they're like, well, I'm just going to hold on to my cash and wait. But now, since stuff are more stabilized, they're more willing to put their money in. So I've seen an increase in the market, but like for the past month, and mostly in the US here, I've seen that the market has hit a hard time, mostly November, October, November, December. So Q4, where the rest of Canada was hit hard on Q3, and same thing in the US. So we're a little late. I think it's a language barrier mostly. Don't know why exactly, but I think it's a language barrier. We're just having like a 3 month late, just like Newfoundland. It's funny because we're like just a little
it,
late, a little
it's
bit.
the time difference.
Yeah, exactly. Maybe it is, but
Yeah. Yeah, this is interesting. And I remember with other investors, we are talking about this fall, and at some point in uh, November, December, it felt like, okay, confidence is coming back a little bit, even though there is not as many transactions happening. I was going to say serious and active investors were kind of coming back. So we'll see what that goes. Obviously, it's a lot related to
well,
interest rates, but
that's exactly serious investor like me, you, like people that have been there for a while. They know, like they knew what's going to happen. They know where we're going, so they're okay with that. They're
yeah,
just shifting. They're adapting to the new market. I think that the seasoned investor are the one that are mostly hit because they're the one that have bought like top dollar and now they're maybe losing money or they think that you can't make money in real estate anymore. So they're the one that are having a hard time, either the people that are just started or the
mhm,
seasoned investor where because their uncle made money 2 years ago, now they want to be in real estate and they want to be a real estate agent, or
yeah.
they just bought a fourplex or something and now prices drop. So they're like, oh my God, what's going to happen? Can't make money. So you have to be careful. You
Mhm.
have to be careful. I think you have to study the cycles. That's really important.
Yeah, and always underwrite in a very conservative way. I spoke to an investor about a week ago who's telling me like he bought it was a sixplex. It's a small property, like almost at the height of the market. He paid a fairly high price. He has it on a variable rate, and now he's like,
Mm.
"Ooh, I'm really, really tight. Like I don't know how much longer I'm gonna be able to do this for." And it was kind of a reminder of, yeah, you got to be careful. You've got to be careful, like how you buy and at what price, and then how you finance it. Because, like this year, well, 2022 is well, I was going to say an amazing example of how quickly things changed between January and December. Like we went up
Mm.
basically 3% in a 9 months period. So if you're on a variable rate, all of a sudden, like you're eating your margin.
Yeah, yeah,
Hmm.
yeah. How you finance your stuff is really, really important. And one point about that, I bought a 9 unit, November 21, and I had in mind to flip it. Then, interest rate was so low. I'm like, maybe I'm gonna keep it, just raise the rent and everything. So that's what I did, raise the rent. And I did a super job. Like I went from 6,900 to like 14,000. It's a big
Whoa.
rate, kind of more than double the income.
Monthly?
Yeah, yeah,
Yeah,
monthly.
that's
And
amazing, man.
yeah, it's awesome. But one thing is, like,
But
doesn't pass at the CMHC though. So I'm stuck.
why
That's
not? Why won't they finance it?
because the way I made the way I set up financing right now, I got a private loan, then I got seller financing and another private loan.
Oh,
And one important note that you have to take if you want to, refinance with CMHC, it's one loan. That's it. If you have more than one loan, you're going to be refused. Well, you have a 98% refusal
wow.
chances.
I didn't know that. So if
So,
you had just one private loan and a balance of sale, they would have taken it or not even?
well, just one private loan. I had to get rid of even the seller financing or balance to sell, however you want to call it. But I would have to get only one loan. And even one hard money loan, the underwriter would have to justify it to CMHC. So,
Jesus.
and because they have to justify the raise of the rent, like just being sure I'm not doing rent eviction, and they have to justify that okay, that's a big building compared to the other one that I have. Maybe if I have a 150 door, that would be different.
Yeah.
But I'm mostly flipping, so that was one big chunk for me that I wanted to keep. To put my money somewhere. Then I'm stuck because I can't refinance. And
Mhm.
if I would be able to refinance, I would get all my money back because I raised the rent so high.
Yeah.
But
Can
next
you
thing you
not just
know,
go conventional on it for like, let's say a
I
2 year
could, I
term?
could. It's a good question. I could, but I have 1.7 debt, and if I go conventional, I could get 1.2. So I got half a mil there
Yeah.
to catch
Yeah.
up.
Yeah.
And unfortunately, I already have a mil. I have half a mil in there, and I would have to, get
Yeah.
another one out of my pocket. So it doesn't
No.
make any sense.
No.
And I would
No.
have to be, I have to freeze it for 5 years with the CMHC.
Yeah.
So
So
I would be stuck with a million stuck in a building for 5 years. Yeah, it's not the best
no.
investment in my,
Yeah.
in my point of view. So
yeah, you might as well redeploy that capital and boost your growth more than.
that's exactly what I want. So I just want to recoup my money, or maybe I'm going to take a little loss, but I'm going to take that money and put it into flip. And at the price that I have houses right now, I'm going to make way more money doing that.
Yeah.
So that's my next strategy, which is I kind of shifted to like doing a lot of wholesale, a lot of flip. Now I want to, cherry pick some nice little bungalow, nice little single family house that I have for like 70% of market value. I want to keep them. Mm-hmm. And next year or in 2 years, I'm going to have 5-10 of those. And I'm going to just, take them as collateral for other big purchases.
Good idea. Yeah.
That's the new strategy.
Yeah. Because you're in such a good position because you're able, you see so much of the market. You can, as you say, cherry pick and buy well under market value on certain deals. So those are the ones where you can build instant equity.
Exactly. And that's what I told a lot of people, be aware of your superpower and take advantage of like contacts that you have or whatever you're good at, you're doing. I'm good at finding good deals, especially single family houses, in the suburbs, maybe duplex, triplex. I'm really good at this. And I got a machine that's rolling. So I'm just going to cherry pick. It's going to take a lot of my time if I go after, big 12 unit, 24 unit, stuff like this. It's going to be like a brand new thing. I'm going to have to redo again. So I just said to myself, well, it's easy. It's right there. So let's just cherry pick a few of those, keep them, and then use that to grow bigger slowly. Yeah. Like get rich slowly. I was trying to get fast. I got stuck. I was trying to get rich fast. And you have a big risk, and it might work, but the bigger the risk.
Yeah.
So I got stuck. I want to get my money back and buy smaller.
Fair enough. If we're getting towards the end here, if people want to find out more about you, what's the best way to get in touch?
Easy to follow me on Facebook, Olivier Lepage, or Instagram is Oli Lepage. I got a TikTok account. You can go, if you're a buyer and you're interested in finding off-market deals, you want to buy off me, go to Montreal HM for hors marché, off market, montrealhm.com, which is a website for buyers. If you're a seller, you need to sell fast. You're in a situation where you want to sell your house. It's ibuyhousesmontreal.com.
All right. And I've actually signed up for your buyer list, and I recently you guys are well set up because I recently got an email from your sales manager asking me like, hey, how's it going? What are you looking for?
Manager,
disposition. Yeah. And so you guys are quite active and well organized. I highly encourage everyone listening to go and sign up. You would be I don't want to say you'll be surprised, but there's opportunities out there, and Olivier's team is really good at finding them and packaging them for you.
A lot of people ask me also to if I coach or anything. I don't coach unless you're buying from me. So if you buy a deal and you need some advice, suggestion, you need a plan, I can help you out with that.
That sounds like a really good idea, actually. So to coach or to mentor someone a little bit as they go through their transaction.
Yeah, absolutely. Especially if it's the first flip. I'm going to help you out until you sell and make money. And then you'll buy another one. So that's good plan for me also.
Yeah, of course. Yep. All right, Olivier. Hey, thank you so much, man. I know you've got a very busy day ahead of you. So thank you for your participation today. It's greatly appreciated. And again, to everyone listening, share this episode with a friend who's really interested in the Montreal market. Olivier is fueled by rocket fuel. And so there's lots to learn. Get in touch with them and go sign up for their mailing list. On this wonderful note, Olivier, thank you for your participation today. It's been a real pleasure.
Thanks for having me.
No problem. Thank you, everyone, for listening. As usual, research your market, make some offers. Signing out. Thank you.